How's the consumer in the U.S. doing?
Well, first of all, thanks for having me. In terms of the consumer data that we see a consumer that's strong and healthy. We are originating over $100 million of loans every day, and right now, all of the repayment data that we see in our daily loan cohorts, it's all really strong and it's exactly in line with our expectations. So that tells us that the consumer is healthy, and that tells us that we're setting the right underwriting posture in our business.
Rob, how about delinquencies in the business? Are those ticking up? What are you seeing there in the data?
No, I mean, we manage credit. That really is job one internally for us, and we stare at delinquency data. That's part of the repayment data that I was alluding to, and we're seeing outcomes that are exactly in line with what we would expect.
Just wondering, with the Fed cutting interest rates last week and indicating that there might be more cuts to come, how important do you think that is for your consumers, and also how important is it for your business?
It may be helpful for consumers, right? It may reduce the consumer's total costs of credit, which I think is beneficial for them. For us, though, we actually like the rate environment that we're in today. We're very profitable as a business. When we look at loans on a unit level, we're sort of at or above our long-term ranges. So we feel good about this rate environment. If rates were to go down from here, it might be a modest benefit for us. Not all of our funding that we utilize is floating rate in nature, so there could be a lag effect to see any sort of real material benefit. But I think one of the great things about Affirm is that we can be adaptable, and we can excel in any macro environment.
One thing we want to ask you about is that Bloomberg Intelligence, our own research team, Rob, has put out a report this morning, and they're projecting that Affirm will surpass 30% growth this year, to ahead of consensus. So just talk to us, if you will, about some of the drivers here when it comes to volume drivers.
Sure. I think it's important to remember that our outlook for fiscal 26, we have a June fiscal year, we've established a minimum GMV for the year. So we don't have a range out there. There's no high end to that estimate. So certainly we put out a minimum number for GMV, and we would hope to achieve that, just given that it is what we think a floor for the business. Closer to home, for Q1, we're guiding that we see about 37% growth in the GMV line in the September quarter, and that would be down from the 43% that we had in the June quarter. So both metrics, I think, are quite healthy and quite strong, and we really like what we're seeing in the business today.
Hey, very briefly, can you just tell us a little bit about the Affirm card? 10% of your users are on the card. Tell us exactly how it works and the profitability on the card's portfolio. Is it better than conventional buy now, pay later?
Our card is slightly better profitability than our business at large. That really stems from the fact that the Affirm card is a repeat usage product. Most of our consumers come to us through one of our merchant integrations, and then look to deepen the relationship with Affirm through some of our direct-to-consumer products like Affirm Card. So there's a lot to like about Affirm Card, both for us, but for consumers too. It puts all of the utility, all of the financing and flexibility that we offer through Affirm, it puts it on a card, and it allows consumers to transact in places that today Affirm doesn't have quite the level of coverage that we have on e-commerce. So we see a lot of usage for Affirm Card in store, in brick and mortar situations. And you can also utilize Affirm Card quickly and easily at merchants where they don't have an Affirm integration yet.
Yeah, Rob, we're unfortunately running out of time. Maybe just 30 seconds just about the growth in your space. We've seen Klarna recently go public. And how far is that potentially boosting even attention to the space?
We think it's good for investors to have multiple providers in the space so that they can compare and contrast across us and Klarna. I would say our space has been competitive for several years now. We really haven't seen a change in competitive intensity. So, we're focused on driving our objectives, and right now the business looks incredibly strong from our perspective.